All right, good morning, everybody. Just want to check and see you again. Here we're live, ready to go. Okay, I'm gonna check in here now. We have Top Step. We have this. All right, this looks cool. I think, yeah, we're live. All right, good morning, everybody. So today's Monday, back at July 7th. So, let's see here. Okay. All right, guys. So let's just see what we've been watching here on MNQ. You're seeing a lot of things going on here in terms of price action. I kind of just wanted to talk about the things that we've been finding out lately, things to watch out for and stuff like that. See how price has been reacting in certain areas. We're going to be taking a look at liquidity, maybe some SMT, some dealing ranges, and see perhaps where we can get a potential good risk to reward entry, right? So here we go. So I'm here looking at the weekly. And we see this happening. We have a low, high, higher, low, higher, high. So I'm anticipating that the area from the sell side delivery here, from here to down here, from down here to up here, it's all going to be balanced. What's going on now? Okay, so price should be treating this area here as support. Possibly seeing this as a way for it to continue going up. We also have the 30U acting as a dealing range from this low to this high. The price could dip down into equilibrium down here, or to the 50% between this level 75 and 50. 50% of that here is all discount. So we can still dive into here, maybe 75% level of the 15U. Failure swing up, only for it to continue up going higher prices. Still feeling really bullish on this right now. I mean, bonds are still being dropped. As a bonds, the bond market's still dropping. The futures, sorry, not the futures, the interest rates are rising. So it's causing people to invest more in the dollar. What do I say? You know, sometimes I like catch myself saying these things. And I'm like, wait, hang on. I don't think that was it. Let's see here. There we go. Okay. Sorry about that. So bonds are, yeah, they're dropping. Interest rates should be going up, causing the dollar to hopefully be on its way up as well, but it's still in that low that we've been discussing for a while now. Okay, but it's slowly recovering because interest rates are going up too. So that makes sense. So that's going to give a tough time for the stock market to go up and find higher prices. And although I'm still feeling very bullish about the stock market, making new highs and whatnot, for this time being, I think it's looking like we might have to have a little bit of a consolidation or a retracement. We do have some couple of things going on this week. That's what I want to revert your attention. So Monday, no news. That's okay. But Tuesday, be on that lookout for not much either. And then Wednesday's the big one. We have FOMC meeting minutes, and then we have someone speaking from FOMC on Thursday. So just those things are to be looking out for today. Hopefully you can get some good trades out of it today or this week. Remember, there's no need to push the button today if you don't see any trades. You could go through this week as well without taking a single trade. But, you know, You just can't rush it. Oh my goodness. Sorry, I'm dealing with other things here right now at my desk at the moment. Maybe that's why I'm just saying a bunch of blabber. But it's just, technology. Sometimes with all these factor authentications and whatnot, like it makes your life feel more secure, but it's like to continue putting on the same thing, same passwords across all your devices, and it's just so annoying. Let's take a look at this again. There we go. Okay, I gotta paste it here. Why did I take so long? Okay, so we have, let's see here. Don't need this, we don't need this. I don't think I need this either. Okay. Alrighty. So price seems to be going down. See here after what? Well, right now, if we take a daily range from this low to this high, you'll see that we'll be crisscrossing here from discount to premium, from premium to discount, from discount back up to premium, premium back down to discount. See that? And it's going to be using this as support. That's the theory, right? If we're to keep going up higher. That notice that overall we're still on premium. Take half of the halves, half of each quadrant. That's a discount. Premium, discount. Oh. But the one I'm looking at right now, excuse me, is this one right here. This low to high. We can still dip down here for turtle soup. That would be really cool for equilibrium. Maybe match that with a session liquidity low. Let's see here. If we take a look at this from the daily perspective, I'm not really going to be referring midway and 15. I'm not going to be doing my 15 U's and 30 U's because last week we had 4th of July and I kind of just threw everything off guard because like Friday, 4th of July, market only traded till like 12. Then all of a sudden we're back to open on Sunday. The same thing too happened here on Thursday. Something similar happened. 1, 2, 3, 4, 5. Yeah, you see how it just ended abruptly at like 1 p.m. on Thursday. And then we just traded at 6 p.m. Like that in itself, we're coming back from like a holiday weekend. Yeah, we got some buy side that we want to make more buy side, but we still have some liquidity sessions, some liquidity that has been left over. I would like to see it get tapped. For example, we had the pre-market today on 7 a.m. lows. That was taken. I'm interested in seeing the London lunch lows to get taken as well. We also have some sell side liquidity here as well. I think we're gonna get down there that low. I think we're just gonna take down this and then go up higher, but anything can happen. If we align this with our higher time frame, you'll see that we'll be taking down this low, London lunch lows, possibly rejecting off 75% of this, going up higher. It's kind of like my prediction. If you want to see higher prices, but look at this. See where everything's balanced? From this low to high, price has been balanced. Sell side delivery, buy side delivery. This whole area is balanced. It's going to be relevant for the whole day. And then look, Monday we open, break down, go up higher. take out buy side liquidity, take out down the less than the medium threshold of this balanced price range, wick down, pair that with the see ES as well, steps down lower. That's interesting. So I anticipate choppiness today. Choppiness because, like I said, we're just coming back from like a holiday weekend. We have some things happening later in the week. No news today, by the way, and we're just gonna be seeing price zigzag today, I believe. But you're still gonna see price reacting off areas of liquidity, going to be refilling imbalances. That mechanic's always going to be there. Okay, sit down a little lower. Where else are we looking for price to go? Well, we have the ORGs. ORGs are not have been created yet, so we don't have to worry about that. We just created the 930 open, so let's take a look at our favorite market, the CFDs. Look at that. See how we wick down there? It's really cool now. Okay. So what am I saying? What do you think the market is going to be doing today? I think we're going to be seeking sell side liquidity today. That's what I think. Before we start continuing the uptrend. I mean, just look at all these liquidity pools. Just buy side liquidity. You think this is juicy for smart money? I think so. Okay. Let's delete these dealing ranges because they're getting a little annoying. Oops. Oh, and I've been having to glitch lately on TradingView where if I hold my mouse as I'm dragging, this big square shows up. It's been really annoying me to this morning, and if someone knows how to get rid of it, please let me know. Okay, so we'll move this up further. Making 75%. Excuse me. 8 open. See that selling down lower. There you go. London lunch lows. No, it wasn't that one. I think it was. Yeah, it was that one. Oh, snap! See that? Interesting. Look at these lows. Low, high on futures. Low to lower low. See that? And these are supposed to be extremely positive correlations because the US 100 CFDs is being represented by MNQ. So that's a good SMT. That's a really good SMT. Remember, futures comes first, priority over CFDs, because that's what CFDs are based off. Look at that, reacting off nicely off London lunch lows. Oops. Lows. Oh, come on. All right. Look down. Let's see here. Excuse me. Is it 9:40 yet? It's about to be. Okay, so we're back in futures. Notice that there's a delay in data, so we dipped down here. I still do think that we're gonna hope to see higher prices from dipping down to London lunch lows. Let's see. Okay, let's do the daily. Well, we should have done that. Now that we've reacted off those lows, I'm curious how we reacted off on the not ES. We're gonna be looking at the 500 right there. Oops, hold up. These are the lows I'm referring to. See that? Look at that. High, low. And then look at US 500 and low to high. Like, isn't that something, no? Let's take a look at this at a closing range. Come on, get out of the way. Silly little box. Okay. Closed above 25%. Dip back down to 25. Expansion. What is that? Where to? These highs. How long will you hold this trade for? Till 4 p.m. If I want to get more specific, I would have to look at the hourly. So it's 9 o'clock. We compare to 7 to 8, 8 and 9 structure. So we got 7. Oh snap! Look at that. It's 8. All of this. All this. Higher high, higher low. What does that remind you of? A daily range, where we anticipate price to react up premium to sell down lower, but we were anticipating these lows to be taken to be treated as sort of soup to go up long. The price reacted off this, sold back down to discount, and now we're looking to see if price push upwards. Um, so that would have been nice to receive. So far, at least. Okay. What about the 30U? So where could we anticipate some form of resistance? So we have a high to low. Oh snap! Hang on. There it is. A low high. All is buy side delivery. Okay, we also have some valid SMT here, high to low, whereas US 500 did it low to high. And it's probably 9:40 now, so let's check and see how was the opening range gap for today. Let's see ORG. Try trading. Oh, almost off. 1, 2, 3. Let's use this one. We have a close. We have an open. How much of a opening range gap is that? About 75 or 115. So we should be seeing low resistance liquidity run conditions. Okay. You notice that reaction back down to 25%. Kept going higher. This is so annoying. Oh my gosh. This upsets me, you know. See that box? This is so annoying. I don't need this thing. Whatever you need to do to deactivate this, can someone help me? Please. Okay. A nice full pull wear to here. We're always looking for 3-hour ranges. Where is our type 2 dealing range? Let me get rid of you real quick, and let me get rid of you real quick. If we take a look at this composition as a whole, we have a low high, lower high, higher low, right? So we've encapsulated this whole Friday's range from Thursday's range. I would consider that as an inside day. So whatever the trend is, anticipate it going in the same direction. That's why I'm still feeling bullish. As well as where's the external range liquidity from this high to this low. So anything that's gonna occur moving forward after Monday at midnight, we'll be using the reference points from the open flow from here, Friday's range, versus Thursday's range. And since we had this whole thing balanced, I'm referring to this balanced price range as something that could affect price action moving forward from Monday at midnight to Tuesday at midnight. See where I'm kind of getting that logic? So that's kind of like what I'm looking at right now. Let me get something here real quick. Oh, beautiful. So if we go back to the CFDs, see that we should be reacting off this real soon. I mean, like we should be approaching this real soon. On futures, you'll see that we have this already level reached, reacting off of. But the CFD is not yet, so that's interesting. Looking for it to react off CFDs. Let's go up higher here. Hold on, guys. I'm just doing something here real quick. Oh, please, this is so annoying. Sometimes technology is just very annoying. You know what I'm saying? Sheesh. Oh, that's not what I want to do. Okay. Oh my gosh. It's like I understand it's trying to make things more convenient for people, but at the same time, sometimes it's just too easy. You know, it like makes it so difficult. Okay, where should you be? See, we went back down to 25% again. I need to go up higher. I really do think we're gonna head up to the 6 range liquidity. 25% discount. Okay. Cool. Notice how on the first leg, from this entire, so we had this dealing range, right? A to B, right? High to low. When we had this low form, right? The B leg, we had S&T structure, remember? That B leg created that low that dipped into that sell side liquidity for London lunch that I was bringing to you guys about in the morning. See that here on ES on US 500. This is US 100. Higher low on US 100. This made a lower low, higher, lower low, yeah. At a time where we're anticipating price to keep moving higher. Why is it moving higher? Because hold up. Because bonds have been dropping, interest rates have been skyrocketing, dollar has been skyrocketing. There should be a risk-off scenario on the stock market, no? But just because it's going to give it a hard time for the stock market to go up doesn't mean that it won't go up completely. It can still go up. We'll just be approaching on a risk-off scenario. So when the price did this, dipped into that sell side liquidity, reacted up in such a way, right? We're still anticipating price to dip into discount so that it can go up higher. We had from the A to B, this leg was the S&T leg, and now we're looking at price go from low to high. We anticipate price to dip into fair value in the sense of discount. So once you made this high, I'm back down to discount. See that? Made this high, didn't go back down to discount, but look at where it reacted off. In a new high, went down again to discount, the low equilibrium. And that would have been another entry for you to get in. And to just buckle up, you know, because this could still keep going up higher. Oh boy. slowly approaching that 75% level on that first A to B leg. This box is so annoying. If you can't hear from the sound of my voice, this box is, ugh. I don't know how to get rid of it. I've been trying to Google it since the morning. Like, how can I get rid of this silly box? Okay. Remember in the morning before I started the live stream, I said we were gonna head down to this liquidity pool and then probably use that to go up higher. And look at what's been going on. Especially since there's no news today either. So this, I gotta figure out a way to get rid of this. It's upsetting me. We're gonna go back to futures now. We're gonna mark this as it's been tapped, right? This is just for me. See, this is the yellow markings. It's actually just set for you as the viewer, just for you to see that how we were referring to these points to be attacked in the future for sell side liquidity. Tap the pre-market 7 a.m. lows. Tap the London lunch lows, along with what? The London lows. See? So there was two pools of liquidity there. And notice how we used the first balanced price range. Premium array didn't even get the medium threshold, sold down lower. Let's take a look at how it's been reacting off gaps too. 25%. Bodies tell the stories, wick do the damage. That's crazy. So it looks like our time of entry has passed for today. That's all I was really looking at. Just price reacting to get into that 25% level. Okay. See, the best form of trading right now is capital preservation. I could have easily gone in there and just taken a trade that, would just be chasing price, If I had chosen price, I would have been following it on premium. That's not what one of our rules dictate. You want to be getting on discount. Okay. I still would like for price to react off this. Make this sort of unravel. Okay. The best trade would have happened right here at the 25%. And as it has been closing, notice how it didn't close here? You wouldn't have moved your stop loss until it did this. That's when it's like, okay, you know what? It's reached a new quadrant level. Let me set my stop loss now to break even. And that's how I would have been managing this room. Once it closes above 75%, then I will move my stop loss from break even to maybe like 50% here. Yeah. So I'm not anticipating, but right now, since it hasn't met that condition, your theoretical stop loss would be either to break even here or to 25%. And you're just letting it do its thing. You're not going to be going in there chasing price. I used to go in there and chase price, but the reality is that I don't have the sufficient confidence to believe that what I'm seeing is true. Just like anyone else, I'm still learning and building up that confidence to say it's not going to go down below that low. That takes a lot of practice and a lot of back testing. And I quite frankly haven't done that yet. I like to say that I have, and to a certain extent, I have gone through a lot of back test sessions, but nothing compares to having that buildup of experience to the point where you have that confidence to say, no, it's not going to go down there. So it's 9:57. I won't be referring to this anymore. I'll be referring to 9:30, the 9 to 9:30, right here. Okay, now we're gonna have this daily range to refer back to. Low to high. What about the 60U? 60U, we're gonna have 10 o'clock, so that'll be referring to 8. So we're gonna be having a high, low, lower high. Excuse me, it's a high, low, lower, low, high, high. So that's a breaker. Okay, that'll be the breaker. Not copy trades. I'm looking for something else. Remember, your stop loss would have been set here. 20 at your entry or the 25. Let's do the 25, just a little bit above it, just in case. So if it goes back down again, then you would have been stopped out, no problem. And see if it goes back down to that level. And notice that as it made that high, you want to take a partial off here. So once it dipped down the first time to your entry, once it had made that high, and it came back down again, take a partial off this old high. And now that it's doing it again, retracing back down to once it made this new high, as soon as it goes back up there, take another partial off. And that's just a form of risk management that I learned from the good old guy himself. I'm not going to say his name here because everyone knows him. At this point, everyone just knows the concepts. But how to use it, that's the next level of like, whew, that's like the next level of experience, you know? There's what it is, and then there's when to use it. We're at that 50% level. What would have been your new dealing range? Well, check this out. It's 10 o'clock now, right? So you would be taking the 9:30 candle, 945. We have a high low, higher low, higher. So your new dealing range would be from this low to this high. Okay. And the best ones to enter are turtle soups. So you can even enter down here again, but that's way below our stop loss. I mean, it can still get hit. We'll see. Okay. See that wick? Okay, all right. We get it. You want to sell yourself. Cool beans. Now let's take the opening range. But you see how you would have been protected already from your first entry? So you would have gotten a stop loss, no problem. You still would have made money. How? Taking a profit here. When I did that again, made that new high. Take profit up here. These old highs right here. Would have made some profit up there. Turtle soup, baby. Okay. Remember, the best turtle soups are the ones that take place below a dealing range. This was a dealing range from this low to this low to this high. Why is it a dealing range? You took out a low and a swing high right there. See that? And it's still okay because price can refer to this whole dealing range in itself. The price to dip down, get more sell stops into discount, and then distribute them longer. This is hard. Would you have been shaken up by this? I would have been shaken up by this. I mean, just look at my stop loss. It would have been hit the first time. But the confidence again to be able to say, "Nah, I'm entering on this again, even though it's going against me." That's where it gets challenging, you know. And it's happening at a time when did I say it was a high, low, higher high. That's a breaker. Sorry, that's a failure swing. So from this high to this low to this high is my dealing range. Let's take a look at this. Yeah, high low. Yeah, there you go. But now what's making me challenge my first my first perspective was that to go was gonna go higher. I'm taking out this ORG here. Remember the ORG is from the 930 to 10. We're still stuck inside this range. London launch is starting too. So here. Look at this too. Low, high, low, lower, low. Now it's in that SMT. And again, this is a CFDs. If we look at the futures market, I mean those 10 minutes behind, look at all this jaggedness. Must be random, right? Must be the randomness. No, not the randomness, it's the lack of news. You saw what's going on for news today? Nothing. Despite us having a really wide opening range gap, the way that price has been reacting, because there's no news, there's no drivers. we're also coming back from the holiday weekend, so I think this explains the behavior of the market today. Oh, isn't this annoying? Also notice the 950 to 1010 macro is about to finish. Hang on, what? There's just a couple things I'm trying to figure out here, guys. Just one moment. But I'm still thinking that price is going to go up there again to premium pricing up here. I'm just testing out some things. A little bit annoying. Let's set up our goal. Set of purple maybe? You can't even see that. Set of blue. The emojis. Ah. Okay. No, let's do this. Okay, let me see here. Alright, let's try that. Okay. So, let's see. Is this turtle soup idea still valid? Well, we still have a minute for that idea to play out, right? You know, the delete range, low to high, turtle soup to go up long, but look at how it's been reacting. Wicks, Sibi, volume imbalance, been consolidating. It should have been more straightforward. Like, this would have been concerning for me. So, it's tough today. It's tough, it's tough. So, because of that, would you have moved your stop loss back to break even as soon as you saw that happening after the turtle soup entry long? Okay? Things to think about, you know? We had already been stopped out anyways from our initial idea based out the 1/4% close. So if we take the range from, wait, so, let me take you out. Let me take you out. It's the white range, remember? We hit above here, new high. Sorry, the red range here. Once we had closed above, like that, this high, the first initial high, once this high was made, it would have sold, would have bought, sorry, 25% bought here. This would have been triggered. This low would have been triggering your entry for it to go up higher. Okay. Then from this high to this low again, because we didn't wake up to 50%, we didn't close above it, you'll still keep your initial entry, so that would have been fine. Went up to close to above 50, now you would have moved your stop loss to break even, which would have been here. You would have taken a partial of this high, it would have made this higher high. It didn't close above 75%, so you would have kept your stop loss safe over here. And then what did it do? We traced back down, turtle soup, but we would have been stopped out already from this stop loss trigger. So I'm currently been out of the trade, so it's just a matter of seeing what happens next. So now it's 1017, and now we have a new balance price range. So if we take this, okay, low to high. So that, what would you call that? Low, high, lower, low. Failure swing, mitigation block, what else? A couple other things. That's how we wick here. So it's going to take effect after 10:15. So we're just going to see if this will react as a premium array for it to keep going down lower. The 60%, not the 60 U, sorry, would have been 8 o'clock. So all this price action. High, low. Okay, that would have been a, what? Bullish breaker, right? But because we've been trading lower from it lately, it's low to this high here. Would have been our bullish breaker, no? Would have been first till 11. The fact that we closed it below this bullish breaker is giving me hints that perhaps maybe we'll be using this as an inverse to go down short. See, notice how we've kind of already been doing that. And then lastly, we had the still daily range from this low to this high, for the 30 view. So, dipping back down to discount. Not to mention the low lows that we've been making again. Wow, so that's just messed up, dude. You're looking for any other way for it to make you fail. Any reason to get you to chase price. They're just gonna let you to do it. Okay, we're taking out buy side liquidity here. We're inside this block mitigation. Will this be treated as a premium array? Look at that. Low, high. So we'll see here. That's a valid SMT. Okay, close below. What if you're trying to enter a hyper scalp, right? 12 handles. Aim for this. getting on a sell stop. What a guy in there. Let's see what happens. Let's take a look at the futures market again. Just realized something, hang on. No, we're still inside that ORG range, so it's being kept in consolidation. If we look at the weekly, notice that what? Let's see this. 15U anchor low to high. Notice I'm still using the support. Starting from Sunday at 10 p.m. onward, this will be referred back to. And look, see that. These are our pools of liquidity that are interested. So we'll just see, you know. Look at that. Low, high. Okay, so you would have still been on a stop loss order. Stop loss, not stop loss, that's sell stop order for it to keep going down in price. It's not doing that. Okay, so then what does it want to do? Let's see. Can you trade through this? Want to trade this as a bullish array now, discount array. This has got to go. So annoying. This, anyone know how to get rid of this box? It's really been annoying. No, it just keeps showing up. Alright, I'm gonna give this 3 more minutes. I'm still feeling a little bearish, like we might go a little bit down. But don't know. I mean, if you had taken that partial there, you would have made some money out the market today. Stop loss triggered. So we technically wouldn't even be considered inside a position right now. We had our turtle soup happening, but when we saw that consolidation occur, that doesn't bring confidence. Now we're up here again. Okay, will we treat this as a bullish array, discount PD array? Let's see. It's 28 minutes. 75% right here. Entry to go up long. Let's see. Where's that first percentage fair value? Ah, see that? Right here. Sippy. Trade it through. Inverse. Trade it back down. Okay. PD arrays are not being respected today. Okay. Curious, would this have been a nice turtle soup? Why? Because remember the 15U? So look, 945. We'll look at 945. We have a low, high, lower high, lower low. Oh my lord. That's a type 2 demon range. From this high to this low. Turtle soup. Okay. Trigger down to this gap. Okay. Low, high, low, lower, low. Okay, but this is also, I would also consider this a turtle soup entry because if we divvy up, if we just take the half of the 60U, this composition from this high to this low is a dealing range as well. But this dealing range high would be good for a turtle soup. And then look at the entire composition as a whole. We're looking at an inverse breaker that's failing right now. So if it's going to fail, where's the best liquidity? Up here. Order block, rejection block, hold high. So where is the external range liquidity? Right here. Let's take a look at this. See if we can reach this up here. What's worrying me right now is the fact that it's acting like a high resistance liquidity run condition. So it might just like, what's it called, tease you and like make you go down here, and then it's going to use that low and then probably go up in its original direction. It's very difficult actually today, for me at least. I'm seeing price have reasons for it to go both ways. Excuse me. I see reasons for price to go into both directions, so either sell side or buy side. And when that happens, you are in low profitability conditions. It's already past 10:15, right? 10:30. Look at that. So I'm gonna go ahead and end it here, I think. because yeah, prices. Look at this mess. Let me see here. One last piece of breaker. See 10-15. We have a high to low. See, now we have this balanced price range. What's the stop price from maybe going down to this low, acting as turtle soup, and then whoop, goes back up to all this. You know? So we can do something like this. High to low. Celebrate that. And then take a turtle soup long. Okay, so we'll come back to that idea and see what ended up hitting. But all in all, I think this is all I'm going to be doing for today. So let me draw out a path so that I don't forget what was it that I was looking at. So we'll draw out this from here, turtle soup, sell, turtle soup, buy. That's it. Just make it more visible. And see what happens. All right, guys. So I'll see you in the next one, all right?